Peter Eliades with you, Stock Market Cycles Update. This is kind of a midday update being done on Friday, November 29th, the day after Thanksgiving. There is a lot to go over. A lot of things are pretty exciting right now, and we're going to try and hit most of them for you to let you know what's happening. I guess the bottom line is, first of all, for those of you who have been following the sign of the bear indicator, that at least on a very technical basis, that streak was ended on Monday, and not just barely ended. It was ended in a pretty big way. The ironic thing is that the next couple of days, Tuesday and Wednesday, continued the streak perfectly. So we had those 18 consecutive days below 195 daily ratio on the AD line, above 0.65, except for that one day. I think that was important that one day, and I think that kills the sign of the bear streak. But I don't have access to my broad database at this point until I get back into my home office. And so I don't know how important that is. And I'm going to check on that in detail sometime over the next few days, actually the beginning of next week, to see how important that is. But we are set up perfectly at this point to have a sign of the bear had we had that day on Monday that fit in the parameters. And today it appears as if, as I'm going online right now, it's the time is 10:21 Pacific Coast time as we're going online. If you look at the advanced decline ratio as it's going by on top of me, it's 1,041 advances and 1,870 declines. That would bring the single day ratio below 0.65, which is what you would want if we had the prior 18-day streak. So now, in order to finish the sign of the bear signal, had we not had that one off day, we would need to have the 2 days after the signal ends, the streak ends, which would have been theoretically on Wednesday, that the next 2 days, which are today, Friday, and Monday of next week, you take the 2-day average, and actually it might extend into a 3-day average of the advanced decline ratio, and if it's below 0.75, the lesser of the two, the 2-day average and the 3-day average after the streak ends, you have the sign of the bear. So that's how close we are or would have been. And again, we're going to check on all that early next week and let you know about it. But I wanted to let you know what the status of the indicator was. In the meantime, look at what's happening in the market. If it were not for what this chart we're looking at now, which is the daily advanced decline line of the New York Stock Exchange, I would be able to make a very powerful argument for you that we have seen an important market top. The fact is, however, that on Wednesday, the day before Thanksgiving, as you can see in this vertical line, the daily advanced decline line of the New York Stock Exchange made a new all-time high. That's not generally the way important market tops are set up. So that is the one exception to the rule. But now we're going to go over the reasons why there is a decent chance that some kind of top was seen. And at this point, in terms of the valuation picture, any kind of top could turn out to be an important top. So let's begin to show you some of these charts. This is one that you're very familiar with. This is the nominal 40-week projection on a daily chart. The offsets are 98.6 to 110.6 trading days. That's what these offset lines right here represent. We broke them way back here in March of this year, and that generated a projection up to between 31.58.63 and 33.31.11. You can see those numbers right here. And we kept telling you all along through these time zones in here when we first started doing updates, we still have that projection. It almost got invalidated down here, but never got below both of the offset lines. So, and then we started coming up again, and we met the closing price projection, the equivalent closing price. We never met the intraday projection, and we kept coming up. Even at this point, when this high was registered in mid-November. Didn't quite get up to the intraday projection. Well, take a look. Now, if we look at that from a distance, we see it looks like virtually an exact accomplishment of meeting the lower part of the projection window. If we zoom in on it, it's going to show you something a little bit different that you missed by a very, very small degree. And when I'm saying a small degree, the minimum upside projection was 31.5863. The actual high on Wednesday, the day before Thanksgiving, was 31.54.26. So if you're talking about tenths of a percentage difference in terms of what that move was and what the projection would have been. So that's the first thing we wanted to show you. We finally, after weeks and weeks of waiting for this minimum upside projection to be met on the daily chart, I think we can say that it was met on Wednesday of this past week. Okay, let's take a look now at, there's another offset that we want you to look at, and that's with the New York Composite Index. Let's go back to the charts here and try and bring up the New York Composite Index, which is right here. And this is very, very interesting. The New York Composite Index shows a very different picture than the S&P does. Here is the December bottom. It also came through above both of these and gave a significantly higher upside projection. In fact, I'll show that to you. We can spread the chart down, change the index scale now, and you can see that originally this area here was the projection given back in March. But on the New York Composite Index, that projection to the upside was easily invalidated down in this time period in August when it broke below both the lines. What happened after that, though, is what's interesting. After breaking below the lines, you now look for the possibility of getting back above the lines with the same offset. And getting above the lines gives you a new projection. Watch this projection. This projection calls for the high end, that's the only one we're interested in now, 13,611.16. You want to write that down? Watch this. 13,611.16. Take that off for a second now. Let's go and look at what Wednesday's high was. This is the high for Wednesday the 27th. Can you see that? 13,000. No, that's the wrong day. 13. Come on. You're making me angry here. 13,611.49. I mean, virtually almost to the fraction, an exact meeting of this upper side of the new projection that was generated back in August and September. So one more completion of a projection to the upside, this one by the New York Composite Index. Okay, what about the trend line on the New York Composite Index? Well, let's take a look at that. We've been looking at this for a long time now, and it is a very important trend line. Look how important it has been. Way back here, we're going back to 2016 now. We can go back a lot further than that. I mean, I'll just scroll quickly over here and show you how important this trend line has been. Every time you get above the trend line, come back down to it, you find support. Come back down to it, almost support. When you break it significantly, as they did in 2016, when you come back up to it, you find resistance. Watch this. Resistance, resistance, resistance. Break again. Play with it here. This is early 2017, late 2016. You play with it. You finally break convincingly above it, coming into the blow-off top that we saw in 2016 and establish the all-time high on the New York Composite Index. Then you had a sharp decline, stopped virtually exactly at that line. A rally back down to the line again, a rally back down to the line again, a rally back down to the line again. Then finally, in October of last year, right in here, the line was broken to the downside, and look what happened. Immediately, a move right up to it, tested it, nope. broke even further, rally up to the line. Then we had the big break into the December bottom of last year. And then from there, the big rally started. And look where the big rally stopped. Right here. April 2019, big rally, stopped right at the line. Good little decline. Think this was probably the largest decline of the year. Not a big one. Rallied back into July, mid-July, late July, stopping at the line. Came back down again. Tried to reach the line, couldn't get up, down again. And now, remember back in here we were telling you that the lines, both these lines met. This is the all-time high, the red line going backwards, both on a closing and intraday basis. This is the prior all-time high, and this was the important trend line. We told you a few weeks ago to watch where they met, and they actually meet late in the year, the beginning of 2020. We thought that might be a time where the prices would get up there and find great resistance and perhaps reach a top. But it happened prematurely, perhaps prematurely, I don't know. But look what happened here. We actually came up to the line, surpassed it a little bit. Let's zoom in and look at it. We surpassed the line a little bit. This is the important trend line. And came up very, very close to the prior all-time high. And look what we did today. A turnaround. In fact, it's attempting to go immediately below the line again. Let me show the closing prices to you. Those are the closing prices. This is where we are now. The day's not over yet. This is a midday update. But it got up to both of these lines, just about, virtually, and now perhaps breaking down again. One more reason why we may indeed have seen a high and perhaps even an important high. This continues to be a line, both of these lines continue to be lines that have to be watched. Okay, what else do we have? Okay, let's take a look at the S&P. I think it's in this group here. I was in a hurry preparing this update because I wanted to get it online for all of you to see. Okay, remember this trend line we showed you, a tops line on the S&P? And we broke above that. On Wednesday, we went nicely above it. We pulled back to it today. And you say, well, but it broke the trend line. Maybe if the market was going to be weak, it shouldn't have done that. Well, you can make that argument. My argument would be, I don't just look at these tops lines and bottoms lines. I like to look at parallel channels. So let's take a look at a parallel channel and see what it looks like. See if it changes the appearance a little bit. Whoa, look at this. This is taking the low, June low, early June of this year, and the early October low, and paralleling it off the high in between, which was July 26th, 30th, whatever the date was. And look what we got up to on Wednesday of this week. Almost smack exactly up to the line. So yes, we broke this trend line, but we came up to the parallel channel tops line. Perhaps another reason why we might be looking for some kind of important top. So that's it. Those are the things I wanted to show you, the possibilities for the market. As I said, early next week, I'm going to check out all this material on the sign of the bear and see how important that one-day differential was. Because aside from that, it was up to this point at least, and it's not completed, but it would have been an ideal setup for a sign of the bear signal. That's where we stand. I wanted to get this update out to you as soon as I could. Thanks a lot for watching.